Hello, everybody. My name is Bennett Tchaikovsky, and welcome. This is my property, plant, and equipment, part 5, equipment sale when we have a gain situation. This is from the accounting professor, yours truly, Bennett Tchaikovsky. This presentation is copyright 2008 to 2022 by Bennett Tchaikovsky. All rights are reserved. Any redistribution is expressly prohibited without the prior written permission from the author. The opinions expressed herein are those of the author only and not the author's employers and or other affiliated organizations. Okay, so right over here, we're now going to be recording equipment sales at a gain. So let's go through and figure out how this whole thing works. So when we're dealing with equipment sales, we're basically taking the asset and we're taking that asset off of our books. So we've been using it. Now it's time to get rid of it. So if you think about it, what's on our books as a result of the equipment? Well, we have the asset, the equipment itself, and we also have that accumulated depreciation on that equipment. So when we go through and sell the equipment, right, this is what's sitting here. To do the sale, I have to go through and debit the accumulated depreciation on the equipment to take it off my books. I have to credit the equipment as well. I also have to show the cash that I'm receiving as a result of the equipment sale. Now, when you look at this, right, this over here is whatever I need to balance. It's a loss. If I need a credit to balance, it's a gain. In these videos, you will not hear me say often memorize something in terms of journal entries, although I probably will say it more than I often should. But this is one journal entry that you do want to commit to memorization, because when we get into things like non-cash transactions, if you're taking intermediate accounting in the future, that's what you're going to go through and do. When you see the textbook explanations for this, most of the time, like what they'll do is they'll say, oh, well, the net book, I'm going to show you how they do that. But if you think about it like this, if you can memorize this equation, and if you kind of think it like a loss is like an expense, is right, we've lost money, things are going out, and a gain is like a revenue, we've earned something. That's how probably I would go through and kind of approach this typical question. Okay, so let's go through and take a look at our problem. So here we purchased equipment on May 1st, 33 for $300,000. The equipment has a salvage value of 60 and was depreciated using straight line, having a useful life of 4 years. On June 30th, 2033, we sold the equipment for 180. So let's go through and do this question. Okay, so the first thing I know that I have to do, and if we think about this intuitively, right over here, I've got equipment sitting on my books for 300,000. Okay. So I know that in terms of doing the journal entry, right? And this is going to be something you're going to want to go through and memorize. I'm selling this on 6/30/33, right? I know that I'm going to be receiving cash. The amount of cash I'm going to be going through and receiving is 180,000. So right over here, I've got cash of 180,000. The other thing I also know too is that in addition to this equipment, I've been using the equipment since 30/30. So I'm going to have accumulated depreciation on that equipment, right? So I'm going to have to figure that out. So I know that that's going to have a credit balance because it's a contra asset account. So over here, I'm going to be debiting accumulated depreciation on the equipment, but we don't know what that amount is going to be yet. Okay, so over here, the other thing I also know too is that I have right over here, I'm going to also have to basically take the equipment off of my books. So over here, taking the equipment off my books essentially means I'm going to have to credit equipment for 300,000. Okay. Once I know the amount of my accumulated depreciation, I'll be able to figure out if I have a loss, balancing, or a gain balancing. Okay. So I figure out these three elements. I have two of the three already. I just need to figure out the third. Okay. So coming right over here, how do I figure out the accumulated depreciation? Well, over here, I'm using straight line. What's the equation for straight line? Acquisition cost minus salvage value divided by my estimated useful life. So over here, when we take a look at this depreciation expense, and the good thing about straight line, it's going to be the same every period. So over here for 30/30, right, the acquisition cost of the equipment is $300,000. My salvage value for the equipment is $60,000. And my estimated useful life is going to be 4 years. So over here, when it comes to doing this part, I now have basically 240,000 divided by 4, or this is going to be $60,000 per year. Now, in 30/30, when I bought the asset, right, I bought the asset on 3/1/30. So my depreciation expense is not going to be the full 60,000 for 30/30, right? I bought it on March 1st. So this is going to be March, April, May, June, July, August, September, October, November, December. This is going to be 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 months. So I'm going to take this 60,000, multiply it by 10/12, and this is going to give me the depreciation expense for 2023. So what I would have done, I would have debited depreciation expense, and I would have credited accumulated depreciation for the 50,000. Okay, so right over here, this is 2030. Okay, so that's the first year. How much should I take in 2031, and how much should I take in 2032? So in 2031, I went through and took it for, okay, so we've got 50,000 of depreciation was recorded for 2030. For 2031 and 2032, because we're using a straight line, we're just going to go ahead and take the 60,000 per year depreciation. Now, when we get to 2033, right, when we actually went through and sold the asset, we sold it on June 30th, right? So I've got to figure out how much depreciation did I take in 2033. Well, in 2033, I would have done January, February, March, April, May, and June, right? So from January 1st, right? So this over here was from 3/1 to 12/31. This is the full year. This is also a full year, but this is from January 1st through June 30th, or for 6 months. So over here, this would over here be, wow. So over here, this would be for 6/12, or from 1/1 through 6/30. So this is going to be 30,000. Okay, so the amount of accumulated depreciation that I entered, or the amount of depreciation expense I took cumulatively over this time, is going to be 50 plus 60 plus 60 plus 30, or 200,000. So over here, my accumulated depreciation is going to be 200,000. This is by far the hardest part of doing these questions, is what is my amount of my accumulated depreciation? So if we follow by using this particular journal entry, right, when we go through and do this type of question, I say over here to myself, and this is to record sale of equipment. And this is going to be my debits and my credits. Okay, so over here, well, I've got 380,000 of debits. I have 300,000 of credits. To balance this, I'm going to need a gain of 80,000. Okay, so But let's kind of think about this intuitively. The asset on my books, in terms of the net book value when I sold the asset. So when I sold this thing, it had a value on my books. So I subtract the accumulated depreciation of 200,000, my equipment net, or that net book value on 6/30/33 was $100,000. So that's what on that particular day. Now over here, when I'm coming over and looking at this, well, it's worth, to me, it's worth 180. To me, it's worth 100. Someone just paid me out 180,000. So I made money. Right. So when you see most textbooks talk about this, they're going to talk about, oh, net book value, can be like, yeah, it's fine. But that's really what that is. So over here, again, if you start over here with the journal entry, you'll be in great shape. Just remember, the hardest part about these types of questions, right, are that over here. And let me do this a little bit differently, because the accumulated depreciation was 200,000. Because remember, I'm going over here and debiting this because I have to make these accounts go to zero once I sell the asset, right? When I sell that asset, the equipment and the accumulated depreciation on the equipment have to go down to zero. So I'm going over here and I'm debiting accumulated depreciation on the equipment for 200,000. I'm crediting over here the 300,000. I got cash. What do I need to balance? Over here, I've got the gain. So in any event, I want to thank you for being with me here today. If you have any questions, or if there's any other things you'd like me to go through and cover as it relates to depreciation or excuse me, asset sales or any other topic, feel free to reach out. I look forward to seeing you on the next video. Have a great day.